Hello everyone, welcome to Thai Finance. Today we're going to talk about the cash flow statement. Cash is the most liquid asset of all the companies, and it lets you continue operations, and it's really king in the company. A good company, it's a company that has a lot of cash. So the cash flow statement reports how much money was generated and spent during a specific period of time. And the cash flow statement tells us whether the cash came from or went to three different categories, which is cash flow from operating activities, cash flow of investing activities, and cash flow of financing activities. So this is a template of a cash flow statement. Basically, it is a cash flow statement, but without the numbers. And we're going to put them very, very soon in there. But for that, we need to prepare the information. And to prepare the cash flow statement, we need two financial statements. The P&L for net income and depreciation, and the balance sheet for the rest of the items, okay? So here I prepared a box, let's say a big box, with the information that we're going to migrate into the cash flow statement. But this is a balance sheet, okay? So from the balance sheet and the P&L, we're going to get all the information to make a cash flow statement. So this is an ordinary balance sheet from 2017 and 2018. And the first thing we're going to do is calculate the differences of the year, of the 2 years, right? So, for example, to get this result, as you can see here in the formula, we take this number minus the previous year, and it gives us this result, okay? And then we just drag it down and we get all the calculations instantly. So we're going to divide into three categories: operating activities, investing activities, and financing activities, which are the three elements of the cash flow statement: operating, investing, and financing. So I'm going to walk you through the whole process. We're going to do some examples in each category, and then we're going to complete the cash flow statement. I'm going to begin operating activities, and these are the resultant changes in operating working capital items. The working capital items are most of them in the current assets and the current liabilities. These are the short-term changes in working capital. I'm going to erase a few examples. This one, clear content, and this one, so we understand. For this, we have to put ourselves in the shoes of the Treasury Department, and we have to think whether we receive money or we're going to give money away. It calls cash inflows or cash outflows. So the first example is inventory. We can see that from 2017 to 2018, we increased the amount of inventories by this amount. So if we increase the amount of inventory, that means that we pay for it. And because we pay for it, it's a cash outflow. And cash outflow in current assets, it's a minus. So we put minus the amount, and we get a negative number. The second example is accounts receivable. Accounts receivable, it's all the probable assets that we might receive in the future, because maybe all the inventory that we sold, it's not yet in our current account. So we're going to receive that money from customers more probably. So in here, because we invest in our customers, it's a cash outflow as well. So we put a minus and we take this number. Then the last example of operating activities, it's accounts payable. We can see that over the years, we increased our accounts payable. That means that we're basically leveraging from our suppliers. We're receiving inventory from them that we will convert into cash, but we don't pay to our suppliers. That means that we receive the inventory, but we haven't paid it yet. So this is a cash inflow because it increased, and that means that we're basically receiving a free financiation from our suppliers. So we just add the amount, and this is it. So in the second example, I'm going to teach you about the investing activities, which is activities primarily related to changes in non-current assets. So every time a company invests, for example, in property, plant, and equipment, PPE, it's a cash outflow to generate more cash, right? Let's say that a company buys an ice cream machine to sell ice cream. So they invest in the ice cream machine and its property, plant, and equipment. In the case of this company, it increased the tangible assets. So that means that there is an investment. And if we put ourselves in the shoes of the Treasury Department, it's a cash outflow. So we put a minus and we take this number. So the next example, first we're going to see the owner's equity. We see that there is an increase. So the owners increase the equity by injecting money in the company. So that means that it's a cash inflow. So we put a plus. Here we have a long-term debt, and we paid for the debt. Let's say from 2017 to 2018, we decrease the amount of debt. And how do you decrease it? By paying for it. So it's a cash outflow. So we put minus this amount. But because it was already negative, I will just correct it. And finally, we have borrowings, short-term borrowings, and it increased. That means a cash inflow. So we put a plus sign and we copy the item. So now that we have all the information prepared, we just have to put the information in the cash flow statement. First, we'll start with operating activities. I will just copy the information and get the result. As we can see, okay, one thing that I want to make very clear, we need two financial statements to do the cash flow statement, the P&L and the balance sheet. And the two items that we need from the P&L, it's the first two items, the net income and the depreciation. The net income, we have it already here. It is in the balance sheet as well. So we just copy it. And depreciation, it's a special number because in the P&L, it's in the expenses, but actually it's not a cash outflow. We don't pay for it. So we have to add it back to the net income, right? And in this case, in the note, we said that there was no depreciation. So it's just zero. But if it was the case, just add the depreciation. Then we have inventories. We just put the amounts. Then accounts receivable. We just put the amounts. Accounts payable. And other short-term liabilities, which is here. And then we have the result of changes in operating working capital items. Then we go to the next section, which is investing activities. So we just put all the information down of all the investments that the company made, which is this one to this one. And we just add the result. And finally, we have the activities primarily related to changes in borrowings and owner's equity. So we put the changes in equity. then the dividends or reserves, of course, long-term borrowings, other long-term debt, and finally borrowings. So we have the cash flow statement. It's really, really easy if you prepare the information. And just for your understanding of the cash flow statement, depending on the core business of the company, every item is more desirable or not. But for companies that buy inventory, it's better to have more cash flow from operating activities than from cash flow financing activities, because if the company has a lot of cash, but because it's borrowed, well, at the end, borrowings have a cost, and cash flow from operating activity doesn't cost a lot to the company. And cash flow of investing activities, most of the investments, it's a cash outflow, but maybe the company sold a machine or a PPE. That means a cash inflow. And most of the times, it's not at the book value. That means that, let's say that a company sold land. Well, that land, it's going to be more appreciated over time as a general rule, but it doesn't mean that they can sell it at book value. Okay, so finally we have the free cash flow, and the free cash flow is how much cash a business generates after investing in assets and operations. And actually, it's a free cash flow. The free cash flow can be used for expansions, to pay to the owners, or reducing the debt, or other purposes. So a lot of people want to know how much a company has of free cash flow, and we obtain it by the operating activities minus cash flow of investing activities, and we have the free cash flow. So that's it for today, and I hope you have enjoyed the video. Thank you very much.